On January 17th, the European Union and Mercosur signed a landmark partnership and trade agreement, ending more than 25 years of negotiations, an agreement that could reshape livestock trade between the two regions. To break down what this really means for beef, poultry, and pork, and how trade flows could shift, I'm joined by Larissa Alvarez, Brazil Market Intelligence Analyst at StoneX. Welcome, Larissa. Great to see you again.
Hi, Johanna. Great to see you too.
So let's start with this. From a livestock perspective, the EU and Mercosur may have signed an agreement, but it still raises a key question, right? Like, where is trade expansion actually possible?
Well, that's a really important question because even though the European Union and Mercosur signed an agreement, it doesn't open the door in the same way for all livestock sectors. Livestock markets are structurally very different because this agreement is creating what we can call asymmetric opportunities because it's not a uniform expansion. For example, among the proteins, beef clearly stands out as the most commercially relevant channel, but poultry and pork are much more sensitive because the European Union is already structurally in surplus in those markets. So the real question here and the discussion isn't whether trade will expand, but where it actually makes economic sense, and that's clearly beef.
Okay, so let's delve a little deeper then, and let's start with beef. Why does beef offer more opportunity under this agreement compared to poultry and pork?
Well, beef is different because the European Union beef market operates much closer to balance than poultry or pork. When domestic supply tightens and prices rise, imports naturally become part of the adjustment. And even in years when the market looks balanced in volume terms, the European Union still depends on imports for specific cuts and quality grades. So this is not just a volume issue, it's a qualitative one because there are premium segments, food service demand, and standardized cuts that aren't fully supplied internally. And that's exactly where Mercosur fits in, thanks to competitive production costs and the ability to supply a wide range of products. Of course, quotas still limit how much trade can grow, but economically, beef is clearly the best fit.
Okay, so that's beef. What about poultry? Why is it one of the most sensitive sectors within the EU?
Well, poultry is sensitive mainly because the European Union doesn't actually need imports to supply its domestic market. The bloc is self-sufficient and structurally in surplus, with very strong trade flows inside the European Union itself. So unlike beef, there's no supply gap to fill, and any additional imports are immediately seen as competitive pressure, especially on prices. And on top of that, poultry carries a strong political dimensions in Europe because the debate goes beyond economics and includes animal welfare, environmental standards, and sanitary rules. All of that makes poultry one of the most defensive sectors under this agreement.
And last but not least, where does pork fit into all of this, and how does it compare to the other two?
Well, pork is probably the most protected and sensitive of the three because the European Union pork market is in a strong surplus and relies heavily on exports to third countries to absorb excess production. Inside the bloc, competition is already intense and producers are constantly managing where volumes go, so domestic market or export. In that context, even small new imports raise concerns because they add competition in an already oversupplied market and can put pressure on prices and export strategies. So that's why porks end up being the least relevant protein from a trade perspective under this agreement.
So when we look at tariff rate quotas and implementation timelines, where do you see real impact? And where do you think expectations need to be a bit more realistic?
Quotas and timelines are key to managing expectations, and they vary a lot depending on the protein. And it's also important to remember that the agreement still needs to be ratified by the European Parliament. But for beef, up to 50% of the quota will apply in the first year, around 49,000 tons, with gradual increases until the 99,000 tons after 6 years. The limitation here is that Brazil already exports volumes above this level today, and that quota still has to be shared among Mercosur countries. Poultry is more of a long-term story because the quota starts relatively small at about 30,000 tons and only reaches 180,000 tons after 6 years. So the potential is here, but it's not immediate. And last but not least, pork is the most restricted case because the quota starts at just 5,000 tons and is capped at 25,000 tons, which really shows that pork is not the priority channel under this agreement. So in short, beef is where the agreement really matters. Poultry is a long-term story and pork remains highly constrained.
Understood. Larissa, thank you so much for your time. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.